The markets actually have shown a reasonably spirited performance. The Nifty and the Sensex are down just about 0.1, 0.2%, and the mid-caps are actually, doing very well for themselves. It's almost 0.5% higher for that index, and the advanced declines are looking like they will hit 2:1. In fact, they're already there. It is 2 stocks in the green for 1 in the red. So not a very uncomfortable place at this point in time if you have bullish positions, and I think a large part of the market is still saddled with bullish positions. But how do things look in the near term and in the medium term? Let's welcome our market master Sanjay Dutt, the director at Quantum Securities, to answer those questions. Morning, Sanjay. Good to have you with us since these are kind of troubled times. After a long while, the stock markets appear to be a little troubled. 9 days of falls. Yes, yesterday we did see a recovery. But do you think the market has to brace for more falls rather than gains at this juncture?
I think so. I think the best case situation would be a consolidation at plus minus 1 or 2% current levels. You correctly, in fact, you answered the question yourself by saying that saddled with long positions. That's exactly what most of the market participants are living with right now. They are all, are more or less fully invested or over-invested and are looking to exit at higher levels. And that's the reason why every bounce back over the last month or two you've seen selling coming in. And I think we may just make a panic low of about 3-4% lower from the current levels in the next few weeks, depending on what the rupee-dollar equation turns out to be and what happens overseas. Numbers are not good. Here in India this quarter, even the future outlook is not looking that positive from any of the industry captains or any of the chief executives. So on balance, I think things are going to be rough.
Okay, Sanjay, hi, good morning. So things are going to be rough perhaps for the near term, but for the longer term, if we are still in a structural bull market, as most people believe, is this the best time for retail investors to be deploying money? And if yes, into what?
I think retail investors should look at individual opportunities more than the Nifty levels or any index levels and decide, okay, 1700 is a good time to buy or 8200 is a good time to buy. Because you need to focus on individual stocks which have corrected, individual stocks which are continue to show strength even though the market is down about 10% from the highs. So I continue to maintain that, divested inward-looking companies, inward-looking sectors will continue to do well. Engineering, capital goods, in fact I'm getting optimistic on steel also, particularly on companies that don't have bloated debt or not living with, large debt equity problems. So I think inward-looking sectors, anything that goes into capital goods, anything that will go into rolling out the infrastructure plans of the next 2 to 3 years for the country is going to be good. And mostly the guys who are providing the input, the companies that are providing the inputs for these, and not necessarily the companies who are going to execute these contracts, like the contracting companies or the L&Ts of the business. So all the companies who are providing inputs to these would actually gain a lot because order traction there and order inflow there and the cash flow situation for them will improve substantially.
Okay. Sanjay, one of the traits of all the results that have been announced so far, even in the cases where profits are good, is that revenues have been bad. They've been pretty mediocre. We call a Godrej with 8% growth a good performance. I mean, revenue has not shown up. When do you see revenue picking up? Which quarter?
I think Lata, that's about 2 quarters away. I see that towards the festive season, towards the September-December quarter, not before that, because by then monsoon, etc., everything would have played out. By then probably we would have got some more easing from RBI, maybe 2 more 25 basis point cuts or something. And like I keep saying, to me the most important thing that has to play out for the markets and that has to play out for the Main Street and the companies is the rupee-dollar equation, because I'm worried there. I think 64, 65, and you'll see panic in company balance sheets as well as in the market. So I think that has to play out, in the next few weeks or maybe next few months. And after that, we'll see everything settling down. And of course, government is taking the right steps, but things take time. Economy, you can't move the macro so fast. Just about now, inflation is coming under control. RBI is getting into a little bit of a comfort zone, but still RBI has projected that it expects inflation to go back up. So I think about we're a quarter or two away. Maybe the September quarter things will start looking better as far as top lines are concerned.
Okay. When I asked you about the sectors that you're bullish on, you said engineering, capital goods and steel. But what about banking, Sanjay? Because yesterday was a clear instance when you saw ICICI Bank spike up 9%. It was an instance that, the market is hunting for good quality names at lower levels. Would you buy any of the private sector banks now?
No, in fact, on the contrary, over the last year or two, you probably heard me saying again and again, I am more optimistic on good quality PSU banks, tier 2 PSU banks, like a Bank of Baroda or a Canara Bank or, those kind of banks, because I think they are going to be better positioned to actually for the multiple expansion as well as the margin expansion once credit offtake really picks up. So, and, banks like ICICI Bank and a lot of the other private sector banks, everyone's hiding in them. They're over-owned. No doubt there will be better growth, there will be better performance. They probably have more manageable NPAs. But I think once the beta sets in, the credit offtake moves, margins and performance of the PSU banks in terms of stock prices would definitely much better for investors as compared to the private sector banks.
All right, Sanjay, just one final question. You said that there would be, there could be a panic bottom, maybe 3 to 4% lower in the near term in the next few days itself. What would you hunt for at that time? What would you buy?
I continue to remain what Surya just mentioned. I continue to remain optimistic on those sectors. I think, but amongst the large caps, I think something that I'll surely now add to my portfolio and every fall is going to be Reliance Industries. Any revival that we see in the Nifty would primarily be led by Reliance, because most of the bad news and all the negatives are behind in that stock. The telecom plays, whether they're retailing plays, their old mothballed assets in the retailing, oil retailing, everything else is going to come into play. Even their, consumer retailing segment, that's the Reliance stores, etc., are now settling down.
Okay.
So I think that's the story to play in the next 2 years. So I would buy that amongst the large caps and the others that I just mentioned.
Okay, I just pointedly wanted to ask you about the auto ancillaries. We just heard of a massive order coming in for Motherson Sumi, as well likely that Bharat Forge also will land up with a big defense order. Is that a space you like?
I think selectively, stocks, selective companies, good managements, manageable balance sheets, who have pricing power, because the biggest problem in this auto ancillary business is companies who are able to maintain pricing power and have good cash in their balance sheets or cash flow management, because normally their buyers, the manufacturers, the OEMs tend to squeeze them a lot in terms of both working capital cycle as well as margins. So only those companies which have some strength, which have an edge over the rest in the auto ancillary space, I think would outperform in the next 2 to 3 years.
All right, Sanjay, we'll leave it at that. Thanks for joining us and speaking about the markets as well as what you expect to see from here on. So that's the word coming in. A couple of sectors, engineering, capital goods, steel and PSU banks. If you're looking to buy, this is the time to buy.